Thank you everybody for joining. This is Generating Cashflow, using best practices and relief programs to your advantage with Chuck Gilboy from the New Hampshire SBDC. I'm Tim Manella, and I'm joined by Jamie Simchick, one of the owners of HRKNSScowork, which is a collaborative working space that's going to be located on the second floor of the Capitol Commons building in downtown Concord, New Hampshire. It was inspired by an incubator study commissioned by the City of Concord and its Chamber of Commerce. HRKNSS gets its name from the philanthropist Edward HRKNSS, a graduate of St. Paul's School, class of 1893. His father was an early investor in John Rockefeller's Standard Oil and left him an incredible amount of money. HRKNSS commendably made many contributions to charitable causes, including education, perhaps the most transformative of which was a gift to Phillips Exeter Academy, challenging the school to revolutionize its educational system. The resulting creation was a collaborative learning table, which encouraged those around the table to learn from each other and grow together. Until about a month and a half ago, I'd have said that the learning table was HRKNSS's most impactful gift. Though he could not have known it at the time, HRKNSS's gift in 1922 of 22 acres of land in Washington Heights, New York, to Columbia Presbyterian Hospital, which would later merge into New York Presbyterian Hospital, is having an incredible impact in our current moment. We are happy to be working with Chuck Gilboy, who joined the New Hampshire SBDC in spring of 2020 as a business advisor in the Merrimack Valley Region. Prior to joining the SBDC, Chuck worked for 5 years as an investor at the New Hampshire Community Loan Fund. In this role, he originated over $2 million in investments in New Hampshire companies of all sizes. He also specialized in financing business sales transactions and turnaround situations. Chuck earned a BA in political science from Elon University and an MBA from UNH. He lives in Concord with his daughter Willow, and they like skiing at Pat's Peak. And without further ado, I'll hand it over to you, Chuck.
That is true. Thank you, Tim, for that very, very generous introduction. And yeah, excited to be on with everyone right now in these interesting times. So we're going to do, and I'm going to go ahead and share my screen here, a webinar that, as Tim mentioned, is really focused on cash flow, some best practices that you can use all the time, as well as some, specific programs that are out there right now. So if you're in a situation where you're trying to generate liquidity, you're trying to figure out how to get more cash flow in to your business right now, how do you do that? And I think we'll just, since we have a manageable number of folks on the webinar, do folks want to just quickly go around and intro themselves and just say what type of business you have and kind of the stage that you're at, and that way maybe I can kind of tailor this a little bit to everyone, and then we can do Q&A at the end. Does that make sense? Or is everybody... Maybe everybody's muted and can't be unmuted.
Yeah. If we're going to do that, it might be easier if you unshare your screen so everybody can see everybody all at once.
Sure.
Right.
Yeah, I will do that first. Yeah, we'll just take a couple minutes.
I'll go first. I'm Heidi Edwards-Dunn with the New Hampshire Small Business Development Center. I'm the Education and Marketing Director.
I'll go next because I'm next to Heidi on the screen. I'm Julie Glossner, and I am the Merrimack Valley Regional Director for the Small Business Development Center.
And Julie's going to help answer questions at the Q&A.
Great.
Hi, I'm Kelly McCaskill. I own Ridge Light Studio. It's a small commercial photography business out of Hopkinton, New Hampshire.
Great. Great. Nice to meet you.
Jamie?
Hi, Jamie Simchick, one of the founders of HRKNSScowork, and we just opened end of last year, early this year, and glad to be working with you guys on partnering for this presentation.
Thank you very much. We're so glad to get to do this with you. It's a nice collaboration. Sarah? Chris, you're unmuted. Would you be willing to say hello?
Sure. Hi, I'm Chris Gilbert. I am the general manager at the Concord Food Co-op, and glad to listen in on this conversation today.
Hey, Chris, how are you?
Good, Chuck. How are you?
I'm doing well. I'm doing well.
Sarah or Val, would you like to say hello and introduce yourself?
All right.
No? Okay.
Well, that's okay. Yeah, no problem. Well, yeah, just great to get a sense of where everyone's at and just how maybe I can tailor this a little bit. So all of that done, I will go ahead and share my screen. Welcome,
you know
everyone.
what? The microphone was, it may be that I needed to unmute somebody.
Oh, that's okay. Well, let me just get rolling here, and we'll, yeah, if folks want to talk at the end, we can do that too. Yeah, I will just get started here. So yeah, this is our slide deck. So generating cash flow using best practices. So just a couple quick notes, and I think Heidi may have covered some of this, but who we are at the SBDC, provide highly individualized consulting and advising at no cost to the business owner. Our program of Powell College at UNH and a resource partner of the SBA along with New Hampshire CWE and SCORE. And advisors can help businesses apply for federal and state relief measures right now, as well as, we've been around for 36 years and we'll continue to be around after this. So happy to help with, all of your needs from A to Z. So, and we've got, a couple of great funding partners, the SBA as mentioned, but the BEA of the state of New Hampshire as well. So we appreciate all of their support. So yeah, a couple of things we're going to go over, some cash flow best practices. For those of you who are in consumer facing businesses, just a few, tips on how to generate some cash flow right now. And through different kind of marketing techniques. We'll go over the PPP program. We'll go over EIDL and other loan programs. And then we'll talk about payroll tax credits and deferrals and some other kind of IRS changes under the CARES Act that I think are just good points for everyone to be aware of. So we're gonna kind of cover the waterfront here with some good kind of basic information. So let's first start with just best practices. What are they? What can we do to really kind of manage and understand our cash flow, particularly in a crisis situation, such as, many folks are finding themselves in, understandably, these days. So, first step, review, go to you think about your financial statements and review kind of expenses line by line and just, understand what they are, what can be reduced or managed until operations return to normal, and that includes owner and management salary. So really just looking at all of that and understanding what you can do. So the next step is, so you're on your balance sheet, and for businesses of a certain size, you may have loans. So understanding your loan documents, and checking, kind of review those, check to see what, if any, covenants you have, and how in your current cash flow situation, those may be impacted if you have something like a debt service coverage covenant or a debt to equity covenant, and will you be in default for any of those? If you might be, make sure you're communicating with your lender about what your plan is. If you have a line of credit, similarly, you want to understand your inventory and receivables levels and what your formula is on your line and how that impacts your ability to draw. So typically it's 85% of receivables, something like that. So understanding what your receivables will be week to week. So to understand those sorts of things, what you want to do is prepare a rolling 13-week cash flow, and we'll get into what that could look like in the next few slides. And understand that cash flow is different from profitability. And it's important to check both and to project both. So you also want to, once you've done that, you want to kind of run some what if scenarios. And these could include a loss of a major customer, changes in collections. You know, if you're in a manufacturing business, you have a client that usually pays you in 10 days. What if those clients now are typically paying you 90 days or longer? What does that mean for your cash flow? Or an increase in staffing cost. I know a lot of retail businesses are facing that right now as they try to keep folks incentivized to come to work and continue to be employed. So that's stuff to be aware of. So that is that piece. So how do you prepare that 13-week cash flow? One, you want to start with cash in the bank. So make sure you're using your bank reconciliations, updated information on your receivables. If you have inventory, you'll go out there and kind of do that physical inventory count. Make sure you're kind of starting from a place where you're trued up. Then you want to forecast sales. Again, if you're in a manufacturing business, start with your POs in hand. If you're in more of a retail type business, you want to kind of rely on trends. And obviously, given the current situation, in either of those scenarios, you want to do some discounting of, okay, I think I historically had this many sales, or I have these customers I've talked to who I might get orders from, but given the situation, maybe I'm giving a 50% probability of those things happening, and just kind of rely on your kind of best business knowledge and best practices. Then you want to input expected cash receipts from your business activity. So from the receivables that you have out there, factor in cash disbursements for things like rent and other expenses, layer on payroll, and then finally add in your borrowing and your projected borrowing. So that is that piece of how to do that. Now, next, I'm going to show you an example of what this could look like. So this is similarly, this is kind of a little bit more a complex example of what you could do, but in a manufacturing type settings, starting with the shipments, that cash in, then expenses, your receipts from receivables, and then factoring in your borrowing down here, taking out that, if you have a line of credit, for instance, taking out those receivables that are over 90 days. Again, that's back to kind of understanding your loan documents. Typically on a line of credit, receivables over 90 days can't be counted. And then understand how much of that loan you need to be paying back over time. And that'll get you to your availability. So that's just one way to do it. There's 100 different variations on this. I think this is the point where I'd plug, if you want to kind of understand this type of cash flow document, and I again, to those earlier points, would encourage everyone to do it. Please reach out to us for some individualized one-on-one advising. That's something that we can absolutely help with. So now, as I mentioned, we're going to just talk real briefly about, and I know this is probably stuff that folks are familiar with, but if you're in a consumer-facing business, thinking about how can I use marketing, how can I use some of these tactics to generate cash flow right now? So one of the things that folks know, obviously maintain that contact with your existing customers in a way that's kind of authentic and meaningful. And if you can kind of offer them subscription or gift cards, those things can be great. Just make sure from an accounting perspective, you're recognizing, you get the cash in from selling those things. Make sure you recognize the offsetting liability on your balance sheet, because those are future products or services that you're going to have to provide. So you want to make sure that you keep track of that. on your balance sheet, and you know what you have out there. You're not just recording cash in from those sales. So again, think about your marketing budget. I know, back to that earlier point about, hey, we've got, go line by line on your P&L and look at those expenses. A lot of times folks can take that tactic of, well, okay, let's zero out marketing here to kind of save money. I think we'd encourage everyone, think of it more in terms of, how do I optimize that marketing spend? Maybe I've been kind of doing that kind of cover the waterfront, scattershot approach. Historically, maybe I want to take a more focused look that's maybe more digital or maybe more social media focused now, but making sure you're doing that in a way that makes sense for your business. And if you do, folks may be at a point where prices have to go up for one reason or another. Maybe it's that the labor costs are increasing. Just make sure you're over communicating the reasons behind those increases to your customers. So that's just another kind of high level tip. But now I want to get into the Paycheck Protection Program and everything that offers. So, because as I mentioned, beyond best practices, we're going to cover some of these specific programs that are out there right now. So one of the things we want to talk about is just, where's this program been and where is it going? So CARES Act funding originally started under, gave money to the PPP program for, specialized 7A lending capacity. And those $349 billion. And those who are eligible are businesses under 500 employees and the self-employed. And I think as folks have probably seen in recent news reports, legislation has passed and been signed by the president that appropriated an additional $310 billion to that program. So it will be reopening this morning, or I should say it has reopened as of 10:30. 60 billion of that was set aside for community banks and credit unions to try to kind of address this issue of how do we help people who don't have existing commercial loan relationships with large financial institutions and who have had difficulty accessing these programs. So that is where it stands now. What the PPP does is it provides critical funding to cover payroll, rent, utility costs, and if you're in a situation where you're not renting, you're owning the building that you're operating out of, it covers mortgage interest as well. The maximum loan amount is 2.5 times your average monthly payroll. And the entire principal and interest of the loan may be forgiven based on your 8 weeks of expenses after you receive the loan. But a couple parameters to keep in mind there. So the maximum loan amount is 2.5 times, so it's 10 weeks of payroll. The forgiveness is based on 8 weeks of payroll from the date the loan disperses. And at least 75% of the forgiven amount must be spent on payroll. So no more than 25% can be spent on those other those other items that we outlined. So a few details on the underlying loan, the underlying PPP loan itself before forgiveness is that there's no collateral requirements or personal guarantees, which is unusual, obviously, for a loan. The maximum size is 10 million. It's a 2-year term and amortization at a 1% fixed rate of interest. So obviously those are very friendly terms before forgiveness is factored in. There's no SBA fees and no prepayment penalty. So if you are left with an unforgiven portion for any reason, you can prepay that at any time. And all loan payments are deferred for 6 months. So that is just the basics of how that program is working. And again, we're happy to address questions in the chat or through individualized advising. So I also just wanted to point out to folks that, the Treasury Department just issued new guidance that I think is in response to, some larger businesses getting access to these loans. But I think it's important for everyone to keep in mind that what you have to certify on the application is that current economic uncertainty makes the loan request necessary to support ongoing operations. But what the Treasury Department added to that is that you've got to take into account current business activity and ability to access other sources of liquidity sufficient to support their ongoing operations in a manner that is not significantly detrimental. So I think when this program first opened, the way they were defining this was pretty vague. They are, Treasury and the SBA are getting more specific. So you really, if you're applying for this program, you really want it to be in that situation where your businesses has been severely impacted and you're going to use this money primarily to cover payroll that you can't because those sales are down and you've had that impact. So you want to make sure that you're meeting those qualifications. So I want to cover some other CARES Act loan programs as well. So the EIDL program also received new funding. It's no longer expected. It has been enacted under this new legislation. $50 billion in loans and $10 billion for grants. Similar qualification metrics. You got to be under 500 employees or self-employed. This program is one where you do not apply through a bank. You apply directly through the SBA. Loans are up to $2 million, but they are not, forgivable loans. They are structured as loans that you will need to pay back for up to 30 years at 3.75%. There is a grant portion to it. Essentially what that is an advance on the loan as you are waiting to be approved. That's up to $1,000 per employee. Sorry, I should say it is $1,000 per employee up to 10K. So a couple more kind of notes on that is, it is a loan that is underwritten by the SBA, unlike the PPP where it's just essentially let's calculate your payroll and then get the money out to you. This is a situation where folks are, they're calculating your ability to repay mainly based on credit score. So if you have a credit score that's been damaged by this current situation, it may impact your ability. And it's also important to say the EIDL loans are not intended to replace lost revenue. They're intended to kind of cover expenses that you have that you can't meet due to the ongoing crisis. Important to say too, you can qualify for both EIDL and PPP loans together. So they can be sort of used in tandem. SBA Express Bridge loans, I don't think are applicable to many people, but if you need to access that while you're waiting for an EIDL approval, you can do so. The other important thing to know is if you have a 7A, a 504, or a micro loan that's issued prior to September 27th, 2020, so you could still be accessing this under new loans you're applying to now, they will pay the P&I on that. The government will pay the principal and interest on those loans for 6 months. So that they will cover that for a 6-month period. So a couple other things to note here. So we're kind of flipping over to the IRS side of these relief programs. The Employee Retention Tax Credit is a very kind of specific program that there's no size requirements, but you do have to show on a quarterly basis that you are that you're impacted by the shutdown, and either through a decline in gross receipts or by an actual shutdown order. And then if that's the case, you can access a credit for 50% of the payroll taxes you're paying each quarter up to $10,000 per employee, or $5,000 in credits. I don't think that's just based on those intros. I don't think this is going to be really that applicable to most people, but it is an option that's out there, and happy to answer questions on that if folks have them. The other thing to know about, especially if you're self-employed, again, both these programs through the IRS are for those who are not receiving a PPP loan. So if you're not receiving a PPP loan, say you're self-employed, you still have some income coming in, but you just need to generate a little additional cash flow right now. What you can do under the CARES Act is defer your 6.2% Social Security tax contribution for 2 years. And so that is just the Social Security tax portion. You defer it, but you pay 50% of it back by the end of calendar year 2021, and the rest by the end of calendar year 2022. Again, those are kind of more detailed provisions that I'm happy to cover with folks if there's questions. So I think this is a final slide here. Under the CARES Act, I just want to cover, there's been some changes to net operating losses that may impact you, particularly if you're a C Corp or an individual. So basically what it does is if you have a net loss, either 18, 19, or this year, 2020, you can now carry that backwards and offset taxable income in any or all of 5 prior years. And that's up to 100% of taxable income in those years. So if you had a taxable loss last year, you could use that to get a refund right now for taxes you paid in prior years. Similarly, and I think probably the more common situation is if you're projecting to have a loss in 2020, you can then you can use that loss to, again, offset profitability from prior years. So that's just, those are some more kind of in the weeds details of the CARES Act, but I think good things for folks to have knowledge of. And now, I'll open it up for, Q&A, particularly since this is we've got a smaller crowd here, so we can kind of manage this efficiently. All right. So Heidi, is there stuff in the chat that I can start with, or?
We just have one question so far. Prior to receiving the PPP loan, we drew from our line of credit to cover payroll. Can we use the PPP funds to repay the line of credit?
Can we use the PPP?
It has to be 8 weeks going forwards, right?
Yeah.
Yes. So it's the 8 weeks from the first disbursement of the loan. So it's, we've heard from maybe some lenders are trying to disperse a little bit first and then disperse more. It's the first disbursement. That's what starts the 8-week clock. So I think if you used your line of credit proceeds to cover payroll prior to receiving a disbursement, the short answer is no, that you would not be able to do that. So that's my understanding. Julie, do you have anything to add there?
No, I agree. A lot of people have had to use their own cash at the beginning. And now, the good news is once you do get the money from the PPP, then going forward, if it's used appropriately, you'll get that credit or forgiveness portion. So I've heard multiple people saying they've gone through their own cash to keep employees on. So you're not alone in that, but it is the 8-week period starting once the money is dispersed.
Yeah, and I think a couple other best practices to add on forgiveness and tracking. So one is there's still additional guidance pending from the SBA on forgiveness. So we're going to be doing more webinars on PPP specifically, and hopefully we'll be able to include some of that info. But two, and I think Hollis mentioned this morning on another webinar we were doing, I think a good thing to do is keep a separate checking account. So you'll have those specific records on how the money was spent for PPP. If at all possible, that's a good practice that I think we're recommending to some folks. The other thing is that, I think, the intent of the law and the intent of the subsequent rulemaking from SBA has been very, one direction, in that this money is really intended to be used primarily for payroll and keeping people off of unemployment. So I would just caution folks around spending PPP loan proceeds on some of those other categories. I would say kind of delay making those actual cash outlays as much as possible until we have that additional guidance on how some of this forgiveness is going to be treated, because you just want to make sure you're not, if you're aiming for 100% forgiveness, that you're going to get there. So anyways, that just a couple additional points there.
There is another question. What qualifies as payroll costs, Chuck? You want to take that one? I'm assuming that's like a self-employed person.
Yeah, and this is, so let me.
Chris, do you want to clarify on your question as well?
Oh, we lost Chuck. He'll be back, I'm sure.
Yeah, I'll answer Jamie's. Jamie asked about the EIDL. The latest information on Friday that we got from Rachel Roderick at the SBA here in New Hampshire was that they believe, or they were still waiting to get further guidance, but she believed that the money that was passed, I believe it's $50 million going towards EIDL loans, are the ones that we don't think they're opening up the portal anymore, and they're going to continue to work on the applications already in the queue. So there were different numbers too, depending on when people applied. I know Rachel said if your number started with a 3, your application number from the SBA for the EIDL, that was a good sign. But because it started on March 18th, and there was 3 different times the website changed. So after the 30th or the 29th, the Monday, the 29th, I think it was 30th of March was when a new website was up and running, and that was the streamlined version, and you had to put in your bank account information and click on yes, I want to receive the advance. I don't know if you did that or not, or if you filed before then. So I don't know if Chuck was looking, but I know that he had a spreadsheet that showed, or maybe a slide of what payroll was. It includes your employee payroll costs, but it also includes, there's Chuck, taxes that were related to that employee and benefits. But if it's for a self-employed person, it does not. I'll let you take it from here, Chuck. Back to the question.
And I just checked, and the SBA website still does not say, it still does not have a link to apply for EIDL. So we don't know whether they're going to open that up or not. The assumption was that they were, but that they've got to get through all of the ones that are already in line.
Well, he says it started with a 3, so you're in good shape then.
Yeah. So Chuck, we're back to you about what qualifies as payroll costs for PPP. Oh, you're on mute. Got it. Okay.
Am I unmuted? Okay.
You're all set.
All right, great. Yeah, so I think a couple things to keep in mind. What qualifies as payroll? So one is, so it's 2 pieces. So I'll start with kind of talking about those who are in a situation where they're running a business and they have employees first, and then I'll address self-employed folks. So if you're running a business and you've got employees, you're an LLC, you're an S Corp, or C Corp, what you would do is there's essentially 2 components to that definition of payroll. One is sort of your strict monetary compensation, or there's that piece. Then you would add in your expenditures, your employer expenditures for health benefits, employer expenditures for retirement match, and employer expenditures for state and local taxes. So if you are a business that is of the size where you are paying New Hampshire business enterprise tax, you will add that in. But back to that initial question on initial part of that formula of the monetary compensation piece, it's consistent of three things. One, obviously, is salary. Two is commissions, so any commissions you've paid folks. And three, for those who are in the hospitality business or the restaurant business, is tips. And so with cash tips, the SBA guidance directs you to either rely on previous records that you have of average cash tips for the employee, or a best faith estimate. So if you have a bar, you have a coffee shop, you've got that tip jar on the counter, you can make a best faith estimate of what that employee would expect to receive. That on the employee, the situation where you're an employer, you've got those employees side, that's how you would think about it. The other important thing to note is that the SBA has given you, if you're in that category, has given you two options. You can either look at your average payroll in the 2019 tax year, through December, or you can look at it over the last 12 months. So you can look at it from April of this year to April of last year to calculate your average payroll. And the SBA is telling people, run both of those scenarios and see what will qualify you for the maximum loan amount. But again, keep in mind, forgiveness is to the extent you are aiming for that 100% forgiveness, it's based on the 8 weeks of actual payroll after the loan is dispersed. So just kind of keep that in mind as you're thinking about, I can calculate this maximum loan amount. So again, I hope that's helpful explanation. Don't ask me why they made it that complicated. But that's how you do it. And again, we'll have this webinar tomorrow that's specific.
We lost him. Yes, we're running more webinars this week on our SBDC website. I put that link in the area. Oh, you're back. I put that link in the chat. If you can find the webinars listed there. Tomorrow's is on PPP assistance for application, like with the payroll calculation piece and the loan calculation piece. And then tomorrow at 10, at 1 o'clock, we're also going to add in assistance for the self-employed webinar. We just decided that a half hour ago. And then Wednesday is this one again, and Thursday and Friday will be the PPP and the self-employed ones at this point. So definitely go to our COVID webpage to, first of all, look for the blue button to request advising if you want to meet with a SBDC business advisor. And then also there's a blue button on there for our webinar calendar.
So I had a question too, Chuck, on the slides. You had put in there about the taxes and being able to go back up to 5 years. So the question I had was, if there's a loss this year, you said they could apply now, but how do they know? I mean, it would be just through, it seems that one seems a little iffy on how you do that until you have your reported, loss. I know you could put, through March, what exactly the loss would be.
Yeah, I think Chuck keeps freezing over there.
Yeah. So.
Yep. Yeah, I can answer that. Heidi, can you hear me?
Yes.
Okay. Yeah, no, I can answer it. So that would be if you had a taxable loss in 2019, you could, so in this last year, you could generate a return right now. If you're projecting a loss by the end of this year, then you have to wait, unfortunately, till the end of this year to generate that refund. So it's kind of an either or. Unfortunately, there's no way to kind of do an estimated loss this year. So
yeah, makes sense. I was just confirming.
Does anyone else have a question? Either written in the chat or to ask us live. Wow, you just answered everything, Chuck. You're good. And with Julie's help.
Wow, yeah. Apologies for any technology glitches here. But yeah, no, and happy to, I think if folks have additional questions, obviously, yeah, either request advising or, feel free to call me personally. I think my phone number's out there on the SBDC website. So thanks everyone for checking in on this. Thanks for your time. I know everyone's really busy right now.
Thanks.
And thank you to Jamie and Tim for inviting the SBDC to join you guys today.
Yeah, no problem. Thank you, Chuck, Julie, and Heidi. This has been great.
Yeah, we really appreciate it. Thank you so much.
You're
You're welcome. We're glad to be here.
Hey, Heidi and